Okay, so the big takeaway from Davos this year, January 2026, was pretty clear. Forget the crisp mountain air. The conversations inside were intense. And one subject just dominated everything: artificial intelligence. Not surprising, right? But it was the tone that shifted. It's not just a trend anymore. One expert called it a super system that's fundamentally reshaping the logic of finance. A super system. Wow, that's a strong term. I like it. Exactly. Regulators, bankers, tech CEOs, they were all on the same page. The time for just talking about high-level principles is over. It's time to build practical rules. Finally. Yeah.
The core question was simple: how do we use this incredibly powerful tool safely? The answers? Much more complex.
The urgency is palpable. AI is a megatrend for at least the next decade, and the upside is massive.
More efficient markets, faster fraud detection, personalized advice. The upside is massive. We all see that. But with great power comes great risk. Adverse outcomes from AI have jumped sharply in global risk rankings, right? So the abstract fear is becoming a calculated board-level risk. Precisely. A whole new chapter. For years. Capital. Liquidity. The usual suspects. Now, technology itself is at the heart of the debate. It's not about putting the brakes on, but building guardrails for the road? That's the perfect analogy. Create a framework so firms can adopt AI responsibly, transparently. Missteps could undermine trust. Stakes couldn't be higher. Moving from reactive to predictive, using AI's own models for market surveillance and compliance. Using the tool to police the tool makes sense if you anticipate the challenges, bias, and complexity. Davos 2026 was the moment finance admitted it's in uncharted territory and started drawing the map. Okay, so if they're drawing a map, what are the first landmarks? What are the pillars? The first pillar is AI governance. And the word that came up over and over was explainability. The black box problem. Exactly. Regulators were firm. If an AI denies a loan, the bank must explain why. You can't just say the algorithm decided. People won't stand for it. No way. It's not just fairness, it's accountability. How do you check bias or fix errors if you can't see the decision path? So firms must prove models are fair and robust. That's a huge operational lift. A huge lift.
Explainability means tool chains, feature attribution, counterfactuals, lineage, built into production, not as an afterthought.
Okay, pillar number 2, the world of digital assets, tokenization, stablecoins, all that. Yep, a simple principle, same activity, same regulation. The message is, it's so straightforward. If a new digital thing acts like an old financial thing, it gets the same rules. That just makes sense. It's pragmatic. If it walks like a duck and quacks like a duck, it's regulated like a duck. A token that functions like a stock, regulated like a stock. A stablecoin used for payments, same safeguards as payment systems. It prevents sidestepping the rules, stopping regulatory arbitrage. Smart, exactly. Third major shift, the elevation of operational risk. For a long time, financial risks, bad loans, not enough cash. Now, system failure, cyber attack, a simple tech glitch, systemic threats, one outage can ripple. We've seen hints already. A cloud provider hiccup and half the payment apps freeze. So a bank's tech resilience is scrutinized like its balance sheet, as it should be. Fourth key point, testing and monitoring. This was interesting. Old software, test once, release. AI is different. It's not static. It learns. It evolves. So the test it and ship it model is broken for AI. Completely. You need continuous testing, constant monitoring.
A big danger is fragmented regulation. In the US, David Sachs warned of roughly 1,200 AI bills in state legislatures.
A patchwork of rules stifles innovation, and it's global if every country goes its own way.
Leaders stressed international cooperation, shared safety standards, a global conversation for a global problem. So the path forward is a framework that's strong and flexible. Protect people, adapt as tech evolves. Those pillars, explainability, same activity, same regulation, resilience, continuous testing, that's the foundation. They didn't solve everything, but they set a clear agenda. Now, turn talk into action. It requires a calm, steady, collaborative effort, a clear and steady signal for prudent progress. Not stopping, but moving forward carefully.